TAG Financial Institutions Group is a specialized investment bank with a focus and passion in providing investment banking services to middle market companies in the financial services sector. And with me is Steven Nigro, the managing partner of TAG Financial. So great to have you here and give us a quick history of TAG Financial.
It's one of my favorite stories. TAG started in 2012. My partner Karen Penny and myself founded it. It was two of us and as an associate. We were lifted out of a bank that we worked together running their financial services group and decided to go on our own, which was pretty bold. I mean, I had done it before, my first stint as starting a company, but thought I would take a rest and be semi-retired a little bit, but that didn't quite work out to the good. So we started TAG to bank specifically within financial services, a lot of that, but a lot more focus on the insurance industry, which we see as broad. So that meant mergers and acquisitions, capital raising, and other stuff for agents and brokers, all the way through reinsurers. And we've grown since 2012 to 26 professionals. I only count 25. Kieran says it's 26, so I think someone's going to complain next payday, but we'll find him or her. And we're in New York, Miami, and Dallas. Since our inception, we focus on the middle market, lower middle market. We've closed over 350 deals. So I don't know the exact number, which is good because there was 6 deals. I would know the exact number, but it's over 350. And most are notable, right? So we like it after the fee's been spent to go into a room and say, hey, you guys did the Clear Blue deal or the XPT deal, or we're noted for some of those. So we've done very well in that respect, focusing on what we focus on, that lower middle market niche businesses. We understand our clients' needs and we understand the industry. The team that I'm working on, I'll take credit for it, but might have been accidental, is probably the best team I've ever worked with in my career.
Okay, good to hear.
Yeah.
And you've obviously been a success starting in 2012 and here we are 2025. So
yeah, well, it's been a great run.
Yeah.
Finding a partner is not always the easiest thing to do. But my partner and I, he's 20 years younger than him. He's 45, I'm 65. That sort of works out well. And I don't know why, but, and you'd be surprised sometimes the decisions I make or he makes are not exactly the old man versus the young man. I mean, we just get the right answers. So It's great.
Now, what gap are you filling in the investment banking space?
I think it's that sort of that incubation phase, that those entities that are startup where there's a dislocation in the marketplace, so they're not exactly, well known or mainstream, and they come to us first to see if there might be some traction that they can get by raising capital, emerging, acquiring. We do that, and that's fun because we see things first. So. If, as an example, if in 2015 we saw a company that was a startup in a new element of the insurance industry, the CEO was in his pajamas in his bedroom. His C-suite was in other companies waiting for money to come in an industry called fronting insurance. That didn't help that much. But we saw that dislocation. We saw it first. There was only one other player in doing what they did at that point. So we saw that need and took that assignment, and we're successful at it. Now there are 25 fronting companies or so it's grown. The other need we feel is there's a very fragmented world in the insurance distribution space, agents and brokers. We're very good at that. We have a due diligence practice that represents 13 buyers, doing about 70 assignments a year. But we understand that industry, and it's very, very fragmented. So we're able to do those smaller deals, do them well, especially because of the due diligence practice. We understand them better than anybody, and it's cost effective to get those deals done.
Now, how would you say your approach is different than a typical M&A or advisory consultant?
I think it's our knowledge of that space. And those, we understand, we live in their ecosystem. We understand business models. We understand owners, entrepreneurs who are 35 years in the business, have built up their agency, let's say, and are selling it for the first time. We know exactly who they're going to sell to. We know the buyers. We keep in touch with them. So that's good. We're fun to work with too. So that makes a big difference. I mean, you go through a grind of an investment banking process. You want to like someone you're going through 3 to 6 months of a process with. So We do a lot of that.
Yeah. Now, you've advised on transactions across insurance,
Yeah.
asset
Yeah.
management, specialty finance. Where do you see the biggest areas of growth?
So I think that certainly we want to keep that bread and butter M&A for insurance agents and brokers going. There's 800 or 900 deals get done a year, so there's plenty of room there. I think we're second on the league tables. It's done in terms of numbers of deals, which I'm pretty proud of that number two. Until I tell people that Goldman Sachs is number 8. So
Okay.
so it is done by number of deals, but we do a lot of them and we do them well. That's good. That'll grow or stay the same, and we'll keep continue that. We are focused now more of seeing most of the growth in the insurance sector a little bit further along on the insurance value chain. That segment of specialized underwriters for specialty insurance, known as managing general agencies, fronting carriers, which lend their rating and their paper and their licenses in order to get underwriting risk from the MGA into a reinsurer. As real need and real growth areas. So from that MGA to fronting company to reinsurance, I think that's where we're going to see the most growth. It's hard to understand. There's a lot of things happening within insurance along that value chain that's made it less sequential. Agents go to carriers, go to reinsurers. That's no longer the case now. It's more modularized. So we can solve risk transfer problems by taking segments of that continuum and applying them to a risk transfer need, which leads to more deals. And that's what we're all about. So that's great.
How would you describe the current market for financial transactions, insurance? Is it buyers, sellers, or
Oh,
particular
boy.
deals getting done now?
Yeah, so sometimes we're insulated with what we do, but I will tell you across the board is probably a seller's market. In fact, where we are, it is. There are there's just a ton of dry powder, a ton of capital chasing our deals. And specifically on the insurance distribution side, it gets a little thinner on the risk take bearing side, the carriers, but still a lot of demand for those entities and not enough quality entities. There's not enough supply of these. So for now, it'll remain a seller's market. Sometimes I'll pitch. I feel the need to tell somebody you got to sell this year, but I don't because it's not true. I mean, I don't see this ending for a while. So I think that we're going to be in good shape going
Yeah.
forward now.
Now, what about kind of the macro environment? Higher interest rates? Is there technology? How does all of that
Yeah.
affect what you do?
Okay. Interest rates went up. They did. Because in our sector, we saw no downward pressure on valuation. In fact, if someone came to us and said the cost of our capital has gone up, so we're going to have to lower our valuations, we would say, listen, you're in the penalty box. Go to the end of the line. There's just too much, others that will step into your place. So we saw no downward pressure. We've seen corrections or perceived corrections where they said, okay, look what happened to multiples, but that's for, say, the larger deals. And I don't think that correction was based on that. So interest rates were okay on. I think that the other thing will happen when they go down, I think it'll cause an escalated flurry of activity.
Okay.
On the technology side, AI is transformative. When I started my career in 1982, a spreadsheet was a piece of paper and a pencil and eraser. So I've seen uh, electronic spreadsheets, I've seen the internet, I've seen email, all these things happen. AI is completely different. And it's different. It's done two things. One, it changed the way we do business as an investment bank. I don't like to tell too many people this because it's made me smarter and faster, and I do more things, that I wouldn't have done. But on the insurance side, if you can imagine that industry being so ripe for automation or the recognition of correlations, the basic blocking rate quote bind insurance policies gotten better, losses, mitigating loss. If you're an insurance carrier, that would be up there as a priority. Imagine when a water level gets too high. That's the intermittent things. A sensor will go off. That's the easy stuff. My pipes get too cold, the sensor goes up. Now, how about a driver's eyes darting, him nodding off, him braking abruptly, and getting contacted? Hey, pull over! You're about to fall asleep, saving an accident. So that application, among all other things, seeing correlations to make underwriting decisions is going to change a lot. It will also cause a flurry of activity because there are groups that used to have to be lifted out and gone to a carrier to get jobs. Now they could do their own thing. Data's available, technology's cheap. The advent of fronting companies and collateralized reinsurance has made it that modularization that I talked about possible. So there will be a lot of activity and it will be technology driven. Our business is good. Technology is good. You embed technology into our clients, and it's accelerated.
Yeah, and it sounds like just making things more efficient.
Oh boy,
And
yeah.
so there's been a wave of consolidation in insurance and fintech. Do you see that continuing, accelerating, slowing down, or do you see that going?
I think because of that interaction between technology and being embedded, we used to just stay away from technology. I didn't think we could do that and specialize in that. We just said, this is our core business, insurance agencies through reinsurers. Now you start to embed that technology in there, and I think that will, fuel this, for a while.
Right.
You know, so I don't see it stopping. I see it growing. I hope it does. Investment banking is not easy. We work on a success fee basis, so I still wake up sometimes screaming I don't have a W-2, but I think I've gotten over it after 25 years of being on my own.
It sounds like you've done pretty well.
Done all right. Yeah.
Dude, thank you so much. It's an interesting insight into your industry.
Thanks.
Thanks.
Thanks for having me.